up or head down, this will be very good liquidity where the bottom Bollinger is. Now remember, bottom Bollinger retest only happens when the 5-day crosses below 20-day. This will be an obvious target where the bottom Bollinger is. So you have to know where your key levels are if you want to hedge this very firmly. Because remember, as I mentioned earlier, if this wants to head down, if this wants to pull back, your pullback may be even higher than your previous high. So you cannot short this too early, especially if you're trading options. You will just be part of the trap and become liquidity for this move to become higher. So just remember, if you want to short this, I mentioned this, if it dumps, you will not miss it because it will start to have many indicators here. Now remember, when we started dumping, 5-day cross below 20-day moving average, retested bottom Bollinger trends down together with 5-day, plenty of opportunities to catch this. We will retrace back to 20-day moving average, and 5-day, 20-day build more liquidity for another leg down. You see it happening. These are trend indicators, not trade indicators. I have Sunday videos explaining that, and you have to watch them because I always talk about very importantly, the market always wants to trend up until you have a very negative catalyst that pushes the market down. And that's what you get here previously, isn't it? And even if it goes down, what's the problem? Unless it's something catastrophic, it will always be a bargain. I talked about that. It will always be a bargain. There are longer term investment trading strategies that I will share more with you in the second half of the year to Discord members. So please, at the meantime, before you start doing massive investment work, you have to learn to not waste your money by trading recklessly. You have to learn to trade as structure demands. So now this is a short week, isn't it? And you have to remember where the key liquidity is. In the 30-minute chart, the key liquidity will be where this yellow algorithm is. Now, if we want to dump here, you will have to grab the liquidity here. By then, your 5-day will turn into some sort of resistance. So just pay close attention to this particular liquidity here. Prior to that, we may have some liquidity here, nested structure, before we start grabbing the main yellow algorithm here with the 5-day moving average. 20-day moving average will be a little further down where the gap is, so you must at least close the gap here before we start grabbing more liquidity. So this will be very important. 20-day moving average will probably be here, so let it close the cup, grab more liquidity off that 602, 604 liquidity zone. As I talked about, that's where the gap is. This will be very important if this wants to head down. Now if this wants to continue heading up, I will want to see more liquidity being built by the green algorithm. So just pay close attention, especially when it's a short week. You want to see more liquidity being built here before we start pushing up. And remember, on the trend indicator, you will see 5-day trending up together with the upper Bollinger. So you want to see upper Bollinger continuing to trend up as well. That will be very important for your 5-day moving average as it continues to move like that. So pay very close attention to all these trend indicators. It's going to be a short week, so you have to trade very carefully. There is a larger liquidity here with the blue algorithm. This will take some time, not so soon, as I was telling you. If there is a larger dump, it will be taken near to that 600 with that blue algorithm. By then, you will already see 5-day moving average turn into some sort of resistance, 20-day moving average turn into some sort of resistance, and you see that the 5-day will trend below that 20-day moving average right there. So just pay close attention to that. Plenty of indicators to look out for, and remember to trade as structure demands. So thank you very much for watching. See you closer to opening bell.